Hey everybody, happy Friday, August 28th. Can you believe it? End of August, end of summer. Back to school, heading into the fourth quarter of 2015. Where's the time gone? Really fast. Hey, we're going to dive right into this week's market update. Been a lot of volatility out there. Global stock markets bounced all over the place, still based largely in part due to fears of the global economic situation, largely based on China and their just lackluster numbers. But that has an impact here domestically on our interest rates. So this week, mortgage interest rates lost a hair, but not enough to make any mention of it. Really, it was flat. Over the last 10 days, we've been relatively flat. We have a great level of support, so there's really no fear of them moving significantly higher anytime soon unless there's just some major jarring news out there that would suggest that. 30-year fix, as reported by the Freddie Mac survey, is still below 4%, depending on your credit, loan to value, and all those good things, as reported by Freddie Mac, with an average cost, points and fees of around 0.6%. 15 years still down in the low threes. So a lot of people, if everything's looking good, 15 years is an attractive option. The government loans, FHA and VA, are still trading in the mid to low 3% range for the 30-year fixed. Jumbo has a little more of a variance because it's a little more subjective, but the 30 years trading in the high threes to low fours, depending again largely in part on where you are credit score wise, loan to value, purpose of loan, and all that good stuff. So as you can see, rates are still in a very, very good spot. What's happening out there? Well, it's been a roller coaster ride, as I mentioned. The stock market opened up nearly down 1,000 points earlier in the week and then bounced all over the place here domestically. So a lot of searching for direction is really what it's coming up. You know, best we can tell you is, hey, buckle up. It's going to be a little bit of a bumpy ride. Certainly puts a lot of pressure on the Fed to try and determine how to manage interest rates, when to raise the rates, when not to raise the rates. So we'll see how that all plays out here and keep going from there. In other news, was a recent survey done that most people believe you need to wait until you have a significant amount of money for a down payment to purchase a home in today's lending climate. Most think like 20% for a couple of reasons. You avoid mortgage insurance and easier to qualify under those terms. The truth is you can buy a home today using conventional financing with as little as 3% down. Still subject to credit and underwriting guidelines, but 3% down. Yes, there's mortgage insurance involved with that, but there's a recent studies shown that sometimes the cost of waiting to save for more down payment actually doesn't save you any money. Even though with a low down payment loan program you still have mortgage insurance, by the time you factor in the future expected appreciation of a home, oftentimes even though your payment is a little bigger now, the equity that you gain in the property is far going to outpace the difference in the payment. So everybody's circumstances are a little bit different. So if we can help you understand what your options look like, we're here to help. VIP, where people are our priority. Check us out on Facebook. Check us out on our website. And if we can help you or anybody we know, we're here to help. Have a great week, guys. We'll see you next week.